Yes, good morning.
Good afternoon, Kun Chramporn. You're talking with Nathakorn and Weena.
Yes, the Fed has lately announced its next stimulus program. Of course, that's called the Operation Twist, and markets have been have been uneasy to react positively because of its downside risk. Now, what are the effects, possible effects on our regional markets, financial markets in the short and the medium term?
Definitely in the short term, you have all seen, the whole world has been affected by the decisions, which basically imply that there are no strong measures that can recover the U.S. in a short time.
Mm-hmm.
Therefore, it seems to be that this will be a lengthy problem, and it will take a long time to fix. And moreover, you also have the European problem that's also a very large scale. Basically, the measure in the U.S. is just the switching of the cost between the short-term and long-term borrowing and trying to reduce the long-term borrowing rate down. So perhaps to make sure that all the long-term borrowing, which require to help the economy, would imply that you need a lot of long-term money. So they want to reduce the long-term cost of funds down. But that's basically it. There's no measure to stimulate any economy.
Mm-hmm.
The fact that the U.S. has been spending more than what they had in the past, and now the question is where are they going to get the money to repay? That issue has not been addressed. Therefore, I think the market has reflect that. So the confidence in the recovery of the real sector and also imply that the stock market will not be short-term for sure.
Mm-hmm. Kun Chramporn, considering the Fed's perspective of abandoning short-term maturing bonds to invest in the future, what are investors left to do in this short term?
You mean investor in Thailand?
Yes.
Or investing in Thailand? Well, I think in Thailand you have to waiting for the fund flows from the bond, because this is a global issue. Mm-hmm. Definitely, the impact will be probably similar to 2008, whereby there'll be some heavy selling from the fund managers around the world first. But after the selling disappeared, which is difficult to say whether how quick, then I believe that the investor should be focusing on the fundamentals, which I think at that time, I believe it should be a good opportunity for buying into stocks in Asia or in ASEAN specifically, because we happen to be in the fastest growing part of the world, and in the past 5 years, including the Lehman Brothers shocks in 2008, the ability to make profits from all the Thai listed firms were very high. They were able to make profits and paying dividends throughout the period. Therefore, I think in the long term, there are less to worry about from the investing in stocks in Thailand. However, in the short term, you never know how deep the retreat of the price would be. But after that occur, I think it should be a good time to invest.
Mm-hmm. Kun Chramporn, many commentators have said that the Operation Twist will not help the U.S. unemployment rate. Can you explain this viewpoint to us? Why would this measure not help stimulate jobs in the U.S.?
Right. As I mentioned, because it just shifts in the cost of fund of the borrowing rate. Now, it does not have any stimulation of the economy at all. Therefore, how are you going to get the jobless reduced? I don't see that.
Okay, well, thank you very much, Kun Chramporn, for joining ASEAN Business Report today.
You're very welcome. Bye-bye.
And joining us right now, also, Mr. Rahul Bajoria from Singapore, Barclays Capital. Good afternoon, Kun Rahul.
Good afternoon.
Kun Rahul, in the light of the recent events, the Eurozone debt contagion, banking sector downgrades, and now the reaction to the latest Fed stimulus, what is your assessment on Operation Twist? Is this kind of reaction expected?
I mean, I'm not so sure whether the reaction is due to the nature of the Operation Twist or the Fed statement. I mean, the Fed did highlight that there were emerging downside risks coming through. I mean, the pace of economic expansion has slowed down, and they were a bit more cautious, probably the most cautious in the last 1.5 years in terms of their forward-looking outlook. But it seems that what's been going on has been largely driven by expectations of something going wrong in Europe, and that's pretty much been the key driver of volatility in markets rather than it being a reaction to what the Fed has been doing.
I see. And is it this Operation Twist is intended to save long-term growth at the expense of short to medium term?
I think what the Fed was trying to signal essentially is that the key idea would be to make sure that long-term interest rates are low. And given the fact that Fed has already signaled that it's going to keep short-term rates low for a long time, it would mean that the term structure of interest rates in U.S. is going to remain very low for a while. And I think that's pretty much the key signal that they probably wanted to send across. I mean, apart from that, I mean, the idea would be to ensure that medium-term investment growth starts picking up, and we could see some bounce in the short-term growth rates as well.
Mr. Rahul, what is your expectation on the U.S. and global leadership in resolving this crisis?
I mean, the crisis of confidence that we are seeing right now in global markets seems to be driven a lot by the fact that there's been very little action or progress made in terms of taking a decision on what needs to be done. We did see the G20 earlier come out and give out statements assuring the markets that they were going to take measures which were required, and that there's going to be a lot more forceful action taken going forward. However, at this stage, I mean, our core belief is that things are probably going to get worse before they actually start improving. So the outlook for the fourth quarter is probably going to remain slightly bleak.
And how will Asian economies cope with the developed markets' possible double dip situation?
I mean, we are not expecting a double dip. I mean, just to clarify right up front. But we think that as far as Asia is concerned, we are seeing generally quite decent momentum on private consumption and domestic demand activity. There is a lot of policy buffer which can be utilized later if required. But at this point, I mean, Asian countries look to be on a very steady growth trend. If we see any downside risks to growth emerging, it will largely be driven by the export sector possibly doing a bit worse given the situation, given the demand situation elsewhere. But overall, given the mix of growth, we think that policymakers are probably comfortable with the current situation.
So do you expect a comeback to the dollar or any other safe havens?
I mean, yeah, like in the next quarter, I mean, we do expect the dollar to essentially strengthen, although that's largely, that view comes from the fact that we expect the ECB to cut rates in the next upcoming meeting in October by 25 basis points. So the interest rate differentials are going to be in favor of the dollar going forward. As such, but over a medium-term outlook, I mean, we do think that the dollar remains on a steady declining path. We expect the Fed to keep its policy much easier for a much longer period than the ECB, and hence we do think that over the medium term, dollar is going to remain weak, but the near-term outlook is for a strong dollar.
And do you think Operation Twist will help stimulate U.S. job growth?
Well, I mean, the idea would be that it will help, it will make sure that funding is available to corporates who already are seeing strong balance sheets at this point. Its impact on the labor market, I mean, can be questioned as such, but the idea would be that if capital is available and if capital is cheap, then at some point it is likely to have a decent impact on the growth and probably lead to job creation as well.
Rahul, and final question, what is your expectation for next week's Asia stocks and equities trade?
It's a bit difficult to sort of second guess as to what happens. I mean, we'll have to wait for the cues overnight, and given that news flow has been pretty volatile of late, I mean, we could very well see market dismay over the inaction and just talk and no action from the G20, from the Fed and others. I mean, sentiment could deteriorate in the near term, which could possibly weigh on the equity markets.
I see, Rahul. Thank you for your input and thank you for joining us today in ASEAN Business Report.
Thank you very much.
Thank you.